Hey guys, and welcome to the Working Money Channel. There is still hope for the cryptocurrency market after the market sees 500 million new customers in Asia and Africa, guys. This is what they're projecting courtesy of XRP Crypto Wolf here on Twitter. So what do we got here? According to a report shared by an economist and macro analyst Alex Kruger, 500 million more investors are going to enter the financial market by the year 2030. So this is only 8 years away. We've got to consider how big the market is today and how much bigger it's going to get in the next 8 years. So, we're coming into a world where cryptocurrency is going to be front and center in many applications, similar to how the internet is front and center in our lives today. And I think, this growth is going to ramp up even more so than the internet, or it's going to take a shorter amount of time to ramp up than the internet did back in the late 90s and early 2000s. There were a lot of growing pains with the internet, and it took some time to get to where we are today. A lot of that was fueled on by smartphones, and those didn't come along until, 2006, 2007? But now that we have all that technology in place, they're saying that cryptocurrency adoption and investment is really going to skyrocket. 500 more investors going to enter the market by 2030. So the group of new high and middle income customers might become a new source of growth for the cryptocurrency market. As the data provided in the report suggests, the new layer of consumers will grow in Asia and African regions, previously the two main regions that provided the most capitalization for the cryptocurrency market were Europe and America, while the percentage of investors from Asia was only catching up. So we are going to see an explosion of investors in those specific regions. So Alex Kruger posted this a couple of days ago. Who will buy crypto going forward? They will. There will be more than 500 million, that's 500 million, more middle and high income users by the year 2030. And if I just bring up the tweet here real quickly, here's a quote from the tweet. The number is striking. We estimate that there are set to be more than 500 million more middle and high income users globally by the time we get to 2030. By 2040, it's likely to be another 500 million. So add on a billion in the next 18 years. Within the next 20 years, that's more than a billion people with considerable spending power than there are today. A 44% increase, almost entirely in markets that today are classed as lower income. So Asia and Africa, the largest growing regions when it comes to this. So in the nearer future, the bull run everyone expects in 2024 will most likely be initiated by investors from the aforementioned regions, but Europe and America will still have a huge impact on the rally. We expect after the easing of monetary policies around the world and the end of the rate hike cycle, by 2040, analysts expect another 500 million users to increase the number of consumers from the aforementioned region. So as I just mentioned, of course, the cryptocurrency market right now, at about 1 billion. Here, let's just bring it up and see where we're at right now. So we did recently see a bit of a spike. It was hovering under the $1 billion mark, $1 trillion in market cap, and now it is just over $1 trillion. In the last 7 days, we've seen a lot of cryptocurrencies spike, like Bitcoin up 12.2%. We've got Ethereum up 11.4%. Even down here, XRP is up 9.9%. So many cryptocurrencies in the space doing quite well at this moment in time. And so here's a question. Does it have to do with inflation? This coming from Henrik Zeberg here on Twitter. Every time inflation tops, the stock market rallies. So if we are going to take a look at the S&P 500, just bringing up the S&P here, this is the hourly. Let me throw it on the daily real quickly here. Just going to remove all the drawings on there. So inflation has soared, and what he's suggesting is, historically, what we have seen is, stock markets rally when inflation goes up. Every single time the RSI momentum is in turning area, US CPI coming out on Tuesday, this time will not be different. So guys, take a look at this chart here. Okay, US inflation rates up here, and we can see the spike in US inflation rates. He's got the RSI down here. We can see these tops all highlighted with yellow circles down here. So this is the purple line if you guys are following with me on the screen here. And as we see these occur, we see a stock market rally. So he's measuring that with these yellow elongated highlighted portions over here on the chart. So a spike, rally, spike, rally, spike, rally, so on and so forth. Now, here we are right now. We are seeing a spike. We're high on the RSI. Does that mean we're going to see another rally moving forward? And how long is this rally going to last? Again, this is the S&P 500 on the daily. Just bringing up real quickly the Dow Jones here on the daily as well. So we were looking at this and we were assuming it was going to continue to move down. But, even just throwing a Fibonacci on here, it did retrace to the 0.618 right up here, did come back down. And guys, look at what we're not forming now on the DJI, the Dow Jones Industrial Average. We are not actually forming a lower low. So first of all, higher high here on the daily. And so what's going to happen here? Again, a very good question. We could do something like this, in which case that theory would be squashed, or we could make a higher high and keep moving to the upside. So right now it's looking like we are making higher highs. This is all positive news. We know cryptocurrency is also following along with this. Look at that. How many straight days has it been now that where we've seen Bitcoin rally? 1, 2, 3, 4 consecutive, 4, 5, 6 actually consecutive days where we've seen Bitcoin in the green. So an interesting observation here. I wonder if this is going to continue, if we are going to see the stock market continue to rally, and by extension see other assets like cryptocurrencies rally as well. I mean, this has been the sentiment, even going back to that Marin tweet, just looking at Bitcoin specifically. There was the prediction that the summer of 2022, we were going to get into a bear market. We were just going to base, and that's exactly what we did. Bitcoin, was hovering in that $20,000 range for practically the entire summer. Now we're starting to move out of that, so we'll see what happens on October the 28th. And if you guys didn't catch that Marin video I did a few months ago, I will link it up here in the top right-hand corner. We've also got institutional investors. They are unfazed by the current crypto winter and have maintained their interest in blockchain and digital assets, according to Megabank State Street. Guys, this courtesy of Michael Branch here on Twitter. So this coming from Australian news outlet Sydney Morning. They just stated, they emphasized that despite extreme volatility through June and July, the firm's institutional clients have continued to make moves in the sector, which means they are buying low. They are buying the dip, in other words. Here's a quote: during the course of June-July period, where things were hotting up in terms of activity, we saw institutional clients not necessarily double down, but they weren't really deterred from placing strategic bets on the asset class itself. So placing bets on crypto in general. 3 crypto exchange traded funds, or ETFs, from Cosmos Asset Management and 21 Shares launched on the CBOE Australia exchange in May. While asset manager Monochrome has recently received approval to launch the country's first Australian financial services licensed spot crypto ETF in August. State Street is a fund administrator for the Cosmos Purpose Bitcoin Access ETF in particular. Ahmad told the SMH that more crypto product launches are coming in Australia in the near future, but did not outline any specific names. He said, certainly our clients, they've been speaking to us more pragmatically about how they might be able to launch products, or what our capabilities might be in the future to help them support the launch of those products. So they are really gearing up, really interested in investing in certain cryptocurrency products specifically. So ones that are tied to the spot price of a cryptocurrency or perhaps a basket of cryptocurrencies. They also mentioned the BlackRock deal down here. Overseas big name American institutions such as BlackRock have been making serious crypto plays of late. Last month, the $10 trillion asset manager partnered with Coinbase to provide institutional clients direct exposure to crypto and launched a private spot Bitcoin trust. So these are all things that we got to keep in mind when looking at this market, when realizing, okay, maybe the bottom is in. Maybe we should be focusing on investing what little we have left. Again, this is not financial advice, just some things to be paying attention to. The other day, we were looking at the Bitcoin chart on the hourly, and we were thinking to ourselves, okay, 21,900, got to breach that micro level, and it looks as though we have. So guys, the next level now is 25,200, give or take. And so it's going to take some trying to get up there. Let me throw it back on the daily for you guys there and put it back on auto just to give you guys a sense of where we need to go next. So 25,200, the market is looking very robust. Even XRP rallying somewhat. Right now, XRP is at 35.5 cents. Not the best performer over the last 24 hours or even a week. Nevertheless, the market is moving in tandem. This is positive news. These are all things we want to see. I'm going to keep moving, guys, because I've got more news from the Algorand Foundation. They've outlined a $35 million exposure to crypto lender firm HODLNOT. The foundation stated that it is pursuing all legal remedies to maximize asset recovery. So the Algorand Foundation has revealed a $35 million USD coin hole in its balance sheet as a result of exposure to embattled cryptocurrency firm HODLNOT, which has paused withdrawals since August the 8th. Algorand is an institutional-grade blockchain infrastructure with embedded smart contract functionality. We all know what Algorand does. The announcement was made on the Algorand Foundation website on Friday, with the foundation stating that it's pursuing all legal remedies to maximize asset recovery. HODLNOT's financial situation first fell into deep waters when its $300 million investment into Terra USD on the Anchor protocol fell dramatically following the depeg of the UST and collapse of the Luna Classic token, resulting in the crypto lending firm pausing withdrawals and halting all trading activity, citing a liquidity crisis. So the Algorand Foundation said the majority of the investment locked on the platform consisted of locked short-term deposits, but are now inaccessible due to hodl not suspension of withdrawals. So they had invested in this. Their money had been locked up, although it does only represent 3% of the foundation's assets, and they do not anticipate any arising operational or liquidity issues, and added that the funds were a surplus to day-to-day requirements. So obviously it's not going to hurt Algorand's bottom line. But just another update here if you guys are invested in the Algorand project and might want to know about this. Wanted to keep moving, guys, because we got some updates with regards to the tech. First of all, I want to address the FLR airdrop. Apparently that date was supposed to be sometime mid-September, and we are approaching that date very, very soon. Well, it's Scoops XRP here pointing this out, so still no FLR airdrop date. And he also mentioned the XLS-20, how that has been postponed, and I'm going to explain why, guys, in a sec. First, let's talk a little bit about the FLR airdrop date. So ftso.eu, when Flare distribution, okay, this is a question posed here on this Twitter account, and so we still don't have a date, but we do know for sure that it's going to happen after code repo is updated by the Flare networks, and 2 independent nodes are more than 67%. So these are all technicals that have to occur before XRP hodlers actually get their first Spark token airdrops. So you can visit the decentralization tracking tool here at flaredescent.ftso.eu. Just giving you some more information here. Independent validators run Flare open source and are in the foundation UNL running a healthy FTSO provider. So again, guys, if you're interested in the tech, you can go here, you can check all that out. The 8-minute observation weeks are coming to an end, but that was always a minimum. The Flare Networks team is working around the clock, but safety first. Whoops. We just go back there. Audits, reviews are probably still undergoing, and the next weeks we'll know more about progress about the Flare mainnet code status. So this is an update, still no concrete date yet on when we are going to get our Spark tokens. I know this has been delayed quite a bit, and I know some of you guys in the XRP community are probably very antsy, probably very anxious to get your Spark tokens and to start participating on the Flare networks. Either that, or maybe you're just going to sell your Spark tokens on the open market. Who knows? Either way, whatever you guys decide to do, we still don't have a date yet for that Spark airdrop. And then going on to the XLS-20 being postponed. Now, Michael Branch brought this up, and so I guess this is the latest development on XRPL development in general. The launch of NFTs on the XRPL has hit a snag. NFTs on the XRP ledger delayed as new bugs come to light. So there are new bugs that need to be sorted out first. The launch of NFTs on the XRP ledger has hit a snag as XTokenize announced in a tweet earlier today that they found a bug that could max out a minter's XRP reserve. So what does that mean exactly? NFTs utilizing flag 12/13 on NF token mint transactions with transfer fees greater than 0 are susceptible to spam trust lines and an increase in the reserve requirements, while also allowing a currency issuer to create infinite currencies for no cost or reserve requirements. So this was written by XTokenize on their GitHub documentation. At first, developers believed that such an attack would be too expensive to pull off. However, after rigorous testing, evidence shows that the attack will cost nothing but transaction fees. Now, this all sounds kind of convoluted. I tried to dig deeper into this. BITRUE also adds to this. I know this will feel like a setback for all projects and users already counting the days, hours, and minutes till XLS-20 native NFTs on the XRPL would go live. But as I have said many times before, we must get things right, not right now. Hiccup, not the end. So it isn't the end, guys, but he does thank XTokenize here for pointing that out after reviewing the report by XTokenize. Thank you. I feel the NFT amendments need a small change. I will remove support for the XLS-20 amendment on our XRPL Labs validator and add support again if this issue has been addressed. Slow and steady wins the race. He goes on down here by saying convenient. So here are just some of the things that need to be addressed. Convenient small feature for minters that can be exploited. Number 2, small code changes are required. Number 3, remove XLS-20 support now and resupport when addressed. And number 4, delay not canceled support, just canceling support for the current release. And so there's more information here if you guys are interested in checking that out specifically. XRP Crypto Wolf chiming in, it's all good, do what you gotta do. It's not like we're in a rush for XRP Ledger NFTs in a bear market. Big Ham here saying, how convenient, days before implementation, what a joke. RippleItin.nz coming to their defense. Obviously, you have little comprehension of the problem. And so, I mean, this is the tech stuff. I mean, I don't like to really comment on people's work ethic and how much they have to do, because I get that this is a lot of work behind the scenes and they do have to get it right. I mean, it can't be a get it right now kind of situation, because they got one shot at it, one kick at the can, they got to do it right. So I'm just happy that they are taking the time and that people are actually finding out what these bugs are. So what exactly is the problem? I guess this is the thing that's actually on people's minds right now. So Combat Kanga down here, Combat Conga, mentions it in a tweet thread. So what happens now for XLS-20? The question, XLS-20 has been delayed, and why? The answer, a nasty little exploit was found which could see NFT creator wallets XRP chewed up in Trustline reserves. So if you're about to mint an NFT on the XRP ledger, would you want your XRP chewed up in Trustline reserves? Probably not. He goes on to say what was the problem. So here it is. When an NFT is sold, the creator of the NFT can get a transfer fee like a royalty. This is basically how NFTs generally work. The royalty is paid in whatever currency the NFT was sold in. So for example, if it's sold in XRP, you'd get the royalty in XRP. If it was sold in another currency, you'd get the reserve fee in that currency. So if the creator of the NFT didn't have a trust line to the currency, one could be automatically added. So he's walking us through the process here. This combination of options, transfer fee allowing non-XRP sales, and auto-trusting is the issue. So this is the big point here, guys. Once an NFT is minted like that, a bad actor, a troll, etc., could simply sell the NFT between a few accounts for different currencies each time, adding a new trust line to the creator's account at the cost of the XRP reserve. So what happens now? The fix itself, I believe, is a relatively simple one, since it's the removal of a feature, auto trust lines being created, and as such requires less testing, which is ironic. Fixing the code, however, is just step one. Once the fix has been coded and released, a new version of the XRPL is made available. This new version has to be installed on the majority of validators first, then the votes can be changed, and then 2 weeks again to start. Releasing the new version of the XRPL and having the validators update their servers can and probably will take time. It won't be rushed, as each server owner will conduct their own tests. It's my guess we are looking at the following times. Code update, best case scenario 1 day, worst case scenario it'll take 7 days. Release updated code, best case scenario 1 day, worst case scenario 7 days. Then there's the updated validator portion. Best case scenario 1 to 2 weeks, worst case 1 to 2 months. And then best and worst estimate for XLS going live. Finally, his best case scenario is 1 month from now, or perhaps 2.5 months from now. That's his worst case estimation. So wanted to thank Combat Kanga here on Twitter, a great thread, just kind of going over what this is all about and what the problem is, what we should expect now from the XLS-20 update, a proposed amendment now to prevent NFT creators' wallets XRP to be chewed up in Trustline reserves. I'm just happy we've got intelligent people here working on this. So I wanted to thank Combat Kanga here on Twitter, Vitsvin, of course, and all the others involved. Our XRP investments are only as good as the network. So, do your thing, get the work done right. Not fast, that's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.